Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to hopefully make some or a lot of money on the internet. Load up for discussion today. We have billionaire investor Ray Dalio recommending a 15% allocation to gold or Bitcoin. So we'll be talking that recommendation, as well as a bit of a reflection on all majors at the moment. We'll be talking Tron filing to issue $1 billion in mixed securities with the SEC, with a company that is pursuing a Tron strategy. We will once again reflect on Treasury companies. Big topic for the moment, and big cloud, in our opinion, over the rest of the year. Mill City Ventures, staying on the same topic, announced a SUI Treasury strategy following a $450 million private placement. So SUI Treasury strategies jumping on the train too. We will discuss all of those, as well as the usual conversation on crypto and NFTs and where we think attention is flowing. So stay tuned for that. I've got Legendary in the co-host seat with me today. We're ready to get into it, but just a reminder, friends, before we do, nothing we say here is financial advice. The market is very risky. We don't know anything for sure. So please proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Tuesday today. It is the 29th of July. How are you doing? How are you feeling?
GM. 2 more days to go in July. I did a thing before the show, which is I went to Kaito, the new capital launchpad.
Okay.
Where they have a second offering.
Okay.
I have no idea what the company was called. I think it was it Theoretic?
Yes, there was one called that.
And it's massively Theoric AI Swarm. It's massively oversubscribed. The target is 2 mil. Allocation requested is 69 mil. So a 30x, 35x, or 33x oversubscription on that.
Wait, say that again. They wanted to raise 2 mil, and it's
2 mil, and there's
69 mil committed.
Yeah, but the thing is, so a couple of things you need to know, because I did deposit myself before the show. Okay. I requested 20K, but you only need to deposit 5K. You just need to fulfill that after the pledge, and you won't get the full allocation because it's oversubscribed. So people are doing the plasma thing. People are throwing in like millions and millions of dollars to get, what was the ratio when plasma ended? Like $1,000 or $2,000 to get an additional 1 or 2 tokens, or $1 worth of tokens. So the same is happening here. It's not happening with the other race, Espresso, which we discussed, where they did change the terms after all. But the Theoric thingy has no vesting, fully unlocked at TGE, and the round is ending in 50 minutes. So it was like I have to do it before the show because it ends when the show is going to end. And just wanted to give it a try to see how it works and how the process for that is. Didn't really read a ton or anything about that. Just wanted to experiment with the platform and have an idea if it's YAP-based and how much of my pledge basically will be fulfilled. Currently at either 10 or 11K YAPs. So let's see how that all works out, and I will be able to report back on that once I know more.
Interesting. So that's a good kind of live shout out. I guess what for people who are listening in, being a little bit like, okay, what's going on here? What was the reason that you thought that this was an appealing opportunity? Because for the people who are a bit unfamiliar, Kaito was traditionally like an engagement measuring platform where you could tell who was kind of reaching the most people, who had the most smart followers. At least that was its attempt. Now it is obviously pivoted into capital raising, so people can see who people are, and projects can try to raise from them. And in this instance, what was the economics behind it, Legendary, that made you think this is a good opportunity? Because as I said, like earlier in the week, they got a lot of criticism for a different raise. I think it was the Espresso one, where it was like 400 mil valuation, 12-month cliff. 12-month cliff meaning you do not see any of your tokens back until 12 months have passed, and then a vesting schedule as well on top of that, which means you only receive your tokens over that vesting schedule. So why was this one so much better?
Okay, so here was my thinking on that. I'm going to share my screen with the people watching our show on video. There we go. So exactly what you said with espresso, 50% unlock at a 1 year cliff, 50% linearly vested over 1 year thereafter.
And also a relatively high valuation, right? So like all of those things are a factor.
Valued at 400 M's, target raise 4M, allocation requested, bit of an oversubscription, 5.5M, but nothing massive. The thinking here
Okay,
is,
so that even got oversubscribed.
yes,
Okay,
but not massively. But the thinking here is the following. This is a new feature that Kaito just launched, the Capital Launchpad. They will want to show some sort of success for that.
for sure.
Now with Espresso, they can't really show that because people will only see the first tokens 1 year after the TGE. And, while they might be up on paper, it's essentially worthless because nobody knows what the market will do in a year. And typically tokens do the thing where they tend to go down after the TGE with few exceptions, such as Hype, such as other tokens. So that's not going to be the success case that they can argue with. However, and they reacted to the massive criticism on the timeline, as you said. However, the other thing, Theoric, no vesting, fully unlocked at TGE, plus seeing that it is more than 30 times oversubscribed, 35 times oversubscribed. My thinking was they want to show a success case. I want to see how it works. We've seen virtuals, how well some of the massively oversubscribed launches did. And from my perspective, the 20K that I requested, which I won't get because it's so much oversubscribed and only 5K had to deposit, will probably mean, I don't know how much it will weigh apps, but even if I get like 1 or 2 grand of an allocation, which I don't think I will, it's not a relevant amount to me where I would research the project. So the important thing for me here to say is I have no clue about Theoric other than that they do an AI storm. I don't know if it's a cool company or not. I just looked at this as a pure game theoretical play and getting a small exposure to that. So I don't really have any fundamental thesis on the company behind that.
What was the valuation?
75 M's.
75. Okay, so that's clearly, look, I know these two companies might be very different, but Espresso are at 400 in this market environment with a vesting schedule, with a cliff of 12 months and a vesting schedule on top. Whereas this at 75 and no vesting, like just on a pure, these two companies are not the same. And arguably we know very little about both of them. But if you're just talking numbers, one is obviously more attractive and is being demonstrated by the market because of this over participation. So I think that's very clear to see. Hopefully that's helpful walking through some of our thinking there, even though that was just live for me. I didn't know that that second one was going on. Yeah, so report back, Ledge, when you find out, maybe tomorrow or Thursday. Let's see. What else? What's going on before we get into the main stuff?
What else is going on? My Yeet farming went well. Yeet reached a massive milestone. That is the online casino by Mando, Keyboard Monkey, Ben Lamb, Mando, who we had on the show. They reached $300 million in wagered volume in just a couple of months.
Why is that? So that's a significant number. Put that into context, because just saying these numbers sometimes doesn't make sense to anyone.
It took Stake a couple of years to reach the first $100 million in wagered volume. The acceleration of gambling that we're seeing in this space right now, Yeet took 4 to 5 weeks to reach the first 100 mil, and for Shuffle was 8-9 months, somewhere in that range. The acceleration of gambling that we're seeing, not only in the space but also outside of Web3, specifically in Web2, with the massive increase in sportsbook volume, which 20x in the US alone over the last 7-8 years or so, is you just can't ignore it. Even think back about our time in Copenhagen last week. Some of the people we spoke to who are building something new or pivoting to something that has a hyper gambling focus, I feel like if Web3 gaming was the big meta trend that we saw last year, the last couple of years, and everyone wanted to pivot to have a Web3 game, and the key selling point was, the in-game economy with real assets is the thing to look at. I feel like everyone is looking into gambling right now. I don't know if this is, on the one hand, I find it worrying. I'm going to be honest about that. From a societal perspective, I do find it worrying. On the other hand, I probably understand it. BTC has gone up so much. Real estate has gone up so much. There's not a lot of things you can do to make money quickly, basically. I mean,
Crypto is what you do.
I think crypto's too late for that. I think what does the average US household have? 9K? If they put that all into BTC,
And a
not
lot
the
of debt as well.
50% that Ray Dalio says, but 100%, what will they do? BTC goes to 1M, they 10x that. That's insane. That's an insane return. Don't get me wrong. BTC at 1 mil, I would be like celebrating that massively. But it's not the same as putting 10K into BTC a couple years ago. And I feel like that this like sort of desperation is kind of growing and leading more people into gambling and into hyper gambling because everything else is becoming so expensive, and that's now the fix for a potential like massive return. That's at least my thinking or my thesis there.
Yeah, I think that's definitely happening. It's becoming way more pervasive across the board. I think there's ways to do things in a smart way. So, for example, the Yeet team, for example, have been super public about there being an airdrop. And so, there's going to be an airdrop for the volume that you accrue. If you produce, well, the more volume you produce, I assume it's like probably relatively reasonable to assume the more activity you produce, the more volume you produce, and you can do that in a capital efficient way, probably gonna get a tasty airdrop at the end of it, which will mean that you can probably be profitable with the airdrop again, very much assuming that you are do it in a capital efficient way, which is not like going in betting $1,000 at a time on like a 50-50 odds chance. Like that is not how you play the game. But yeah, as you said, I think that is interesting. It's an opportunity that we've been kind of vocal about as well. We're participating in it. Funky, your hand is raised. Give us a quick take here before we get into the main headlines. Quick question from Clint in the YouTube comments. Can US citizens use Yeet? I believe the answer to that question is no, but it's worth double checking. And Roger Rushing asking, what's an airdrop? It's when you use a protocol a hell of a lot, and you spend fees, you generate transactions, and then when that protocol itself has a token event, when they issue their own kind of cryptocurrency, you will be given a proportion of it. Sometimes they're great, sometimes they're not. So you can't assume that it's going to lead you to generational wealth, but sometimes you can be smart about it. Funky, your hand is raised. Coming to this conversation, my man, what do you got for us?
Just wanted to say to Legendary, I think that was a very astute observation about the desperation of many human beings at this point to be doing all this hyper gambling. I think it's been a long time coming. I don't think it's something that's specific to crypto per se. I think just when, say, fantasy football started back, I don't know, 15-ish years ago, whatever it was, people were getting together and having their thing. But now, like, you turn on ESPN, they're showing you like lines and odds, and it's become so ingrained into our everyday culture and so normalized and so accepted. It is mind-blowing to me that we are at this point with gambling. But I don't think it's something that's crypto specific. I mean, just look at Squid Game, right? Like this epitomizes the position that people are in societally and why they need to do these things where they risk their lives to get some kind of money to save their family. So I just think it's a very astute observation on the part of Legendary, and it says something is fundamentally broken with our entire society when people are trying to just get out of this. The average American has less than $1,000 or whatever it is. Like the structure is broken, and I feel like this just says so much about us and our culture and our society that we're willing to gamble on virtually everything. And the last quick point, I orange pilled the banker I was sitting with yesterday. She's from Russia. She learned I was in the industry because I'm doing stuff for my father's final affairs. And then she's like, tell me, I've always been curious about Bitcoin. So I got to talk about Bitcoin while I was sitting there doing all the paperwork.
Love it.
Funky. Quick follow-up question for you there. Because in the States, obviously that sportsbook volume did grow massively. And last time I've been to the States last year, I saw this explosion in ads for all sorts of sportsbook betting. Has there been a regulatory change that allowed for this, or?
I wouldn't be able to specific law. Yes, obviously it has. Oh, looks like Oxy maybe has an answer to this, but yes, I mean, in the last, I would say 3 to 5 years, it's been insane the amount of sports books that have come online. Like here in Florida, we have Hard Rock as a casino. And as long as you Florida, you can just like download the app and just start betting your face off. And there's MGM and there's all sorts of other ones too. And there's lots of ways to get around your locale or jurisdiction. Just like the person who asked about Yeet, you just turn on a VPN. Oh, I'm not in America. Here we go. Let's go.
Always an option. Always
You
got
raised
that
your hand.
VPN option. Oxy, did you want to come in here?
You are on mute if you are trying to say something at the moment.
Hey, sorry about that. So yeah, there were some law changes. I used to audit some casino sports betting companies specifically. So yeah, there were some changes in regulation to where several states, so federally they allowed the states to start allowing it. So only certain states allow sports betting like this, but or online gambling, I think it's more broadly, because you can play like blackjack and things on the different sites. But yes, to answer your question, there was some regulatory changes, and it's every other commercial, it feels like, in the US that you're seeing some sports betting or gambling site being advertised to you. It's insane.
Gotcha. The only last thing I wanted to add to that is, because I saw it on the timeline today, because we spoke about desperation, Sanjay did post this Netflix movie, which apparently, according to his post, is #1 in Dubai at the moment. It's hard-chilling crypto. It's not like Squid Game with a few throwaway lines, because Funky, you mentioned Squid Game before. And also, if you look, the movie's called Wall to Wall, and in this like post that I'm sharing, it says, "A life of debt, of endless noise, am I to blame?" So this also leans exactly into this, like, I haven't seen the movie, just judging obviously of what I'm seeing here, into this like desperation narrative, and how like gambling can be a fix to that. So it's becoming a very popular like mainstream media narrative as well, apparently.
Interesting. Yeah, two final thoughts, then we'll get into the main headlines and the main conversation today. One, I think the opportunity, it's a desperate situation, but I think the opportunity is to bet on, we're always looking around at various industries and sectors, thinking of how to place bets. So what are the trends are? We've obviously noticed a trend there. So the opportunity is to figure out how to place the bet on that thing increasing. It doesn't mean that you yourself go and gamble all of your money away because the trend's increasing. It's like, how do you express a bet that you think hyper gambling will increase over time? That is, I think, the question you need to ask yourself. One way might be to use Yeet in a smart way to participate in the airdrop. Another way might be to find out some of these teams that are building interesting hyper gambling games, and you might want to invest in them. Maybe there's a bit of a morality thing there. How much do you want to participate in the economy that is, ultimately kind of, it's a fine line maybe for some people, but it is a trend that's increasing. The laws have obviously made it more applicable. So I guess the question is, do you want to participate or not? And the answer to that will be different for each person. Final point is, I do believe, yes, lots of people are struggling. One of my big ideas, which I've shared on the show before, is that I think the middle class is a historical anomaly, and we are going to trend towards there being no middle class. I think there's all kinds of examples how there is no middle class already. Lots of people are being propped up, whether it's by, if you have this kid, we as the government will give you this amount of money. If you need healthcare, we are going to give you this. If you need this, we're going to give you that. As far as I can tell, New York is going through a period of time where, want to put in rent controls and this and that. And just across the board over the last few years, that's one of the ideas that I've had. I think, we're going into a time where increasingly we're going to need to get propped up, especially with the AI. So I'm not bullish on the middle class right now. That's one of the trends I think you're going to want to keep an eye on too. Ledge, any final thoughts before we hit the price action and the main headlines?
Yeah, we had this discussion, it was probably like half a year ago or so,
Yes.
on the erosion of the middle class. And I thought that was a very, very unique and interesting thought that you had. And I had a lot of time to reflect on that and research on that and talk to ChatGPT about that. And I came to the conclusion that I agree with you fully on that.
Yeah. I've been thinking about that a lot for over a long period of time. Look, let's get into it, guys. As usual, we're going to start with the price action. Then we got some good headlines for you today. Let's get you up to speed. We've got Bitcoin. Everything's kind of red today. Bitcoin is just down a touch to 118, more or less flat, to be honest. ETH's down 1% to 3.8. XRP is down 3% to $3.13. BNB is down a couple of percent to 823, still up 8% on the week. So out of all the other majors, that's the one that's outperforming everything. Solana's down 4% back to $183. Dogecoin is down 5%. Hyperliquid is up a percent, $44.60. Sui is down 7% to $3.90. So mostly red across the board there. Hype just outperforming a touch. Getting into the meme coin side of things,
Performing massively. Tron is up 6.5%.
Tron is up, moving as well. Maybe to do with one of the headlines we're going to be sharing later today, which is to do with one of the Treasury company filing for $1 billion shelf statement with the SEC. So we're going to be talking about that in just a little bit. Justin Sun, the founder of Tron, not disappointing, not going to be left out of this Treasury company game. So we'll talk about that in a moment. In terms of the meme, on the meme coin side of things, everything is red more or less. Big correction day. Doge is down 5%. Pepe is down 8%. Pengu is down 5%. Bonk is down 8%. SPX is down 5%. Trump is down 6%. Flocky is down 7%. Fartcoin's down 15%. Back to $1.16, down 30% on the week. Although less a meme coin, more like a very significant protocol, Pump.fun is down 20% on the day. 2.2 bill now. It did bounce off from around this region last time, but the metrics are showing that I think Pump Fund's share of Solana-based meme coin activity dropped as low as 8% yesterday, with Bonk taking the vast majority. So that is pretty wild for a company that everyone was so optimistic for so long. They've still got a ton of cash on hand to either buy back the token or implement some like very significant plans and incentives to get that company moving again. But for the moment, it is not sitting well with investors, at least for the moment. Mog's down 8%, but you get the picture. Everything wrecked. One of our favorite coins here, down 11%, also corrected, although that's still up 50% on the week, which is pretty crazy.
There's one exception. That's
okay.
Rebita. It's a token on virtuals with a nice story tied to it. It's up 60%.
Do you want to tell it?
Yes, it's up 60% on the week. That is an AI agent, which decided to buy a CryptoPunk for 89 ETH. That is 330K. Yesterday was done in a fully automated way. The AI agent picked the punk, bought the punk. Some said it overpaid for that, but the markets did like that a lot, because on that news you can see that the token basically spiked 50%, corrected down a touch, or corrected down like 38% ish, and then pumped again, and is sitting with a healthy 50% daily gain.
Interesting. So maybe just interrupting the flow of the roundup for a second to reflect on that, because I had this post literally 4 days ago where I said this. I'm just finding it, and I will share it because it's basically changed, in my opinion, since I shared this. So I had this post just 5 days ago, July the 24th, where I said this run-up has been a lot different to December, January. There are no runners you need to quickly catch the contract adjust for. You have had so much more time to think and allocate properly before something moves. Fundamental shift towards quality coins where teams have built things versus speculative meme coin frenzy. I do think in the last 5 days or so, something shifted where, you have an example. One manifestation of this is this virtuals coin just going on an absolute tear today. You had the Zora coin, Zora itself being sent to like 800, 900 mil from, that was almost like a 6, 7, 8x in not a long time. And then therefore the coins on Zora also all going around. So people were launching creators were launching coins on Zora. And if you caught them super early, some of them might have run to like 7 mil, 8 mil, 10 mil, something like that, which if you catch something early can be very, very significant. So this is one of the first examples of the type of mania which requires you to be like on Like if you really want to chase it, you need to be on. You need to know when that artist or creator launches that coin so that you can be first, so that you can see that tremendous upside. Whereas I thought 1 week ago, you just pick Pengu, you pick Rect, you pick some founders who are doing a great job and have been crushing it for multiple years, and their coins are undervalued, and you just buy it and you hold it. But now I think there's a bit more urgency, a bit more franticness from what I could tell. If you want to play in that direction, Ledge, have you noticed the same thing? Funky, I see with your hand. I'll come to you in a second, but I just wanted to check with Legendary. Are you noticing the same thing? And if so, do you intend on participating in that? If that is a trend which continues, or are you content with the strategy that you've been doing so far?
This is the question I keep going back and forth over the last days. And I spoke to a couple of very good friends about that because I don't know what to do. Like on the one hand, I'm feeling comfy in my portfolio and I could sit on that. On the other hand, I see people who have a way larger portfolio than mine gambling on the shitters again. I'm like pretty happy with my strategy, but then I'm also like thinking that I shouldn't be that complacent to ignore the 10x monthly runners, the Zoras, and other moves that are, let's say, even Bonk. I didn't do anything on Bonk, and it was so fucking telegraphed. And my mind is currently not in this short-term opportunity seeking mindset. Things like, okay, that's maybe a bad example, but even things like ICOBs joining Pirate Nation, token has corrected down ever since, but that was like a 30% increase. It's probably not something I would have traded because I knew where ICO was going to go because we were like good friends and spoke about that. But more the mental concept behind seeing something happening and being in this mindset where I was in November and December of this is an opportunity and this is how I make money with this. And right now it's more like I got my shit on Hyperliquid. I got an insane amount of volume on Yeet. I got my positions in Plasma. And I think Plasma was a really good one, given how little people got in. It's like only 3K wallets or so. But I'm not in the degenerate mindset that I was last year. And I'm contemplating whether I should go back to that for a while or not.
I think I actually think it's worth checking on your portfolio because I know what you mean. I think this is what happens when risk starts to ramp up across the board. You start basically no amount of risk would make you think that you're taking risk, especially when you start seeing everything going up across the board. And when you first started talking, I was agreeing with you. And then as I was digesting it a bit more, I was started to disagree in the sense that I think we probably are taking a hell of a lot of risk. Like if you were to look at and maybe I don't know your portfolio perfectly, right? But if I think about the proportion that I hold in Rect or Pengu, for example, it's definitely not going to kill me as a proportion of my portfolio, but it's certainly not nothing. And then I start to think of like all the NFTs I hold, one of which I de-risked last week and sold for a decent sale. And so I don't know. I think we just get very desensitized to risk in this space. And actually, you probably are taking a ton, but you just start to think that you're not. And it's just worth like checking in and checking your proportions.
Yeah, let me clarify on that. And then as you said, let's also get funky into the discussion. Let me clarify on that because we said we have the majors, like that's the stuff like Bitcoin, where I'm happy to have 20%, 25, 30%, whatever, a big chunk of my portfolio in. Then we have the like conviction bets where like something like Rect, comfy to put 1, 2, maybe even 3% of my portfolio into that and thinking it could go to a bill, it could do whatever it will do. It will take profits at some point with this. But what I don't have right now in my portfolio is the 0.1% super
quick in and outs.
Quick in and out, 0.1% of my port into something where I think it could 5 to 10x and play the game that I played on Pump Fund, that I played on virtuals quite successfully. That I don't have. So I have and yes, it's of course it's a super risky portfolio to have so much of my money in crypto, but I don't have this like small bet size, super long tail, short-term trades placed at the moment. And this is where I'm thinking where I should have some of them or not.
Yeah, I know what you mean. And I think I think what we did well in November, December was we recognized that, or maybe you're maybe a very high frequency trader, slightly more than me, but like we both recognized back then, the market is like essential to participate at this point. I wouldn't say right now it's like essential for you to take those types of trades. I think in November, December with the AI agents, it was absolutely essential. Like you need to do this right now and play that game if you want to take a risk for your portfolio. You know, Zora popping off for 1 week, I'd want to see some more evidence potentially that that is something which is going to happen. Although, as everyone knows, you need to be ahead of the confirmation, right? Once the market's confirmed it, the opportunity is less there. So, Funky, what do you think? Your hands raised. What's your thinking on risk as it relates to this conversation? You are on mute, my man. You are still on mute.
All right, yeah, my desktop was freaking out, wouldn't let me unmute. No, I think what's interesting is just thinking about the debasement of the dollar, what you were just saying, B-Check, in terms of risk. I'd almost argue that it's risky to not be exposed to this industry at this point, right? And so I think this is a great conversation. And it also has me wondering, Legendary, because of that comparative effect and that post I commented on, is this what drove what you were saying about the whole rich versus poor thing? You know, I think you guys are doing a very reasonable job. And one of the things I really enjoy you continuing to do is articulate your thoughts on the portfolios that you guys are holding, because I think it's a valuable tool for learning for all of us who are participants in the dialogue or who are just listening. I think what you guys are doing is pretty safe because you're very good at taking chips off the table and everything else. Whereas I am guilty sometimes of maybe doing the hero trade thing. Like I was actually raised my hand because I was curious which virtual agent it was, because one of the ones that I've held for a very long time was actually the second Vader EO Swarm. I wondered if that was it because it had like a mega pump out of nowhere. And I was like, oh, is he talking about Swarm? Was it that the one that was the virtual agent? But just the broader conversation, I think, is very enlightening. And I don't think that I think you guys are playing in a very smart and safe way. But just the big picture, I would say, is that, and this is what I was saying to the banker yesterday, you can have a partial Bitcoin. I think some people do not understand this. You know, if you can own a tenth, right? Like that is going to be worth a lot of money someday. And just to kind of dip your toes into it and learn a little bit about this industry, because we were talking about how this is going to fundamentally change the warp and woof of just our entire, you know, we look back at the internet and we say, oh, you know, it was a fad in the early 2000s, but only in retrospect, 2 decades out, do we realize how essential the internet has become. I think it's going to be the same thing for blockchain and AI. And it's going to take until 2035 before everybody's like, oh, it was right in front of our face and we didn't recognize it. So I just feel like what you guys are doing, you know, I think you're playing at a pretty straight down the middle approach, to use a golf metaphor, right? You're hitting the fairways. So that's all you need to do is hit the fairways and get on the green.
Yeah, appreciate the thoughts, Funk. As you say, the risk profile in crypto is already exceptionally high. So personally, I don't think you actually need to take all of the risk that sometimes people are trying to push you towards, or how the space makes you want to feel sometimes, when it's possible to, you know, buy rect at 150 and then it goes to 450 like in a few weeks. So appreciate that there's still risk there. But anyway, right. I want to finish the roundup just to get you up to speed, and then we've got a few interesting topics to discuss. You've got PayPal announcing Pay with Crypto, a new payment method allowing merchants to reach more than 650 million crypto users in hundreds of eligible cryptocurrencies. Unit on Hyperliquid. We talk about Unit a lot. This is going to be a titanic airdrop when it does come. Teasing bringing Bonk to spot trading on Hyperliquid, and XPL, which is Plasma, which is going to be Plasma's token whenever they tokenize in about 30-40 days after this lockup finishes. And I guess there will be a pre-market for that, which is pretty exciting. I saw the founder just tweeting that they wanted to, could someone put him in touch with the people at Plasma? So I suspect that will be on the cards. Yesterday, Plasma public sale was overcommitted by $373 million. That's more than 7x oversubscription for the sale at a $500 million valuation. So, you know, I think that is going to be a clean. What would I say? I think. In fact, I put a post out as soon as we were talking about it on the show. I think this is bear case 2 bill. I think it'll be a 4x for whatever allocations people get. And then bull case will be potentially higher. Percentage supply of active Bitcoin has risen from less than 30% to 37% since the end of last year. We've had some big whales selling recently. Proof of Play teased new Pirate Nation game dropping on Abstract. AI Agent purchases CryptoPunk for 89 ETH, as Legendary mentioned. And as I mentioned slightly earlier, Bonk Fund's share of Solana launchpad activity rises to 86% as Pump Funds declines to 8%. So pretty significant shift in the wins there on the launchpad activity on Solana. Ledge, we've really spoken about a variety of things today and we don't have much time, but is there anything you want to point out there before we hit the main headlines?
Not really, no. We are 40 minutes into the show and are only at the Web3 Roundup. Maybe just one sentence on the NFT market. NFTs are down, with the exception, it's going to sound absurd, of Clonex. Clonex is up another 13% on the day at a 0.3 ETH score.
Guys, I got to say, this is worrying. Clonex is a dead NFT collection, which was purchased by was originally created by Artifact, then taken over by Nike. Nike then cancelled Artifact. Why are people buying this? Like, it makes you question where we are in the cycle. No, am I wrong?
Absolutely right. I mean, yeah, I don't know. Nothing to say on that other than thinking that it's absurd.
Yeah, I mean, well, the only thing to maybe articulate clearly, maybe we don't have anything to say because like you can sense it instinctively. But the thing to say is people are going further and further down the risk curve. So like as I said, DCAing out of some things rather than trying to allocate more. And, I got tempted into like one trade I wanted to put on the other day, but I think a little bit of DCAing out is on the cards for me over August, potentially. So I want to keep that in mind if I'm seeing people wanting to buy up a dead collection, which frankly, everyone really dislikes as well because of the history. So I don't know what's going on. That's how I would deal with it though.
This NFT archeologist meta that we had in.
Oh, that's always bad. That is always bad. For people who are more newer here, whenever people start talking about historical NFTs and how you got to like try and rediscover some dead collection and this is really historical and therefore it's valuable, it's always bad. It always ends badly. People already know which NFT collections are valuable. Trying to manufacture a narrative for some historical NFT is always towards a speculative moment in the cycle where people are trying to get rid of some NFTs that they've been holding for a historical amount of time. So
there was this obsession, just to give a bit more context on that, for a couple months last cycle, I feel. Obviously, punks were the dominating thing in terms of this is the first NFT PFP collection. And then the archaeologist's mission was to find, we found a collection actually predating punks and it has to be more valuable. And this went on for a couple months with weird collections appearing out of nowhere.
Yeah.
And we were trading. I was buying it weren't like some abstract sort of maps that were predating punks. And they were minted over a span of 5 years. And then if you had one predating punks, it traded at a massive premium.
Do you remember crypto art?
Exactly. That's the one I meant, right?
Really?
With an E at the end. Wasn't it like crypto arte?
Yeah. And it was like this yellow and green and
exactly. I was flipping them because you had to buy the ones that predated punks and they were trading at an absurd premium.
Show that one on the screen for people. Like I flipped them as well, like pretty successfully. In fact, I was claiming these because when they were first rediscovered, you could claim them direct from the website.
There we go. Oh my God.
Go. Oh wow, these look amazing. I need to go back and buy some of these. How much are these now?
0.069. Of course.
Historical. Truly historical. Got to buy one of these. Guys, by the way, I'm joking. I'm saying maybe I would buy one just for like old time's sake. But that's been like a historical memory for me because I was literally minting these off the website. People were like, "Oh, this is a really old historical NFT, and you can still claim them direct from the website." You can see what are people looking at here, Ledge? It's like a variety of colored blocks or something.
Yeah, and they were, I think, representations of block space and
Block activity or something. Yeah.
And then you had old ones like the one that I have on screen, which was mint in the mint year 2018, for example. It had a couple special blocks on that. That had golden miners on it. That was the thing you were chasing, and that went for 7 ETH back in the day,
Oh
5
my
ETH,
God,
4.5 ETH. Yeah, that was the thing to hunt.
Yeah, there was like these very, very specific and the reason why we're talking about this is so you can notice patterns of behavior that happen in like in pockets of mania. Like people were literally going into this specific art collection's trait and saying, okay, if it was one of those that was created before this date, it's worth loads more. If it isn't, then it's worth less. And people were believing it. People were believing it. They thought that would be a good investable thesis. People say like, okay, well, these colors are worth more than the others. And you know, a year or two later, it's like a very affordable, non-expensive collection. So you've got to be able to spot those like pockets of mania and the way that people start talking about certain things in order to make sure you don't kind of fall into the same thing. Alternatively, looking at that, I just kind of like it. I might buy one just from a historical perspective, not because I need to go up 5x, because I don't know, I'm an actual collector now for something. So if you like it, you can buy it. That's always an option too. Right. Only 12 minutes left. We've got a little bit sidetracked today. Ledge, talk to us about Bitcoin here. Billionaire investor Ray Dalio has come out with a big recommendation. What else do we need to know? And any other market thoughts on kind of how the majors are moving at the moment?
Yeah, billionaire founder of Bridgewater Associates, that is Ray Dalio, said it in a CNBC podcast that a portfolio should have 15% allocated either to gold or to Bitcoin. He's also saying that I'm quoting here, strongly preferring gold to Bitcoin, but that's up to you. And the thinking here is that we are at the point of no return, he warned, because the government will likely need to issue another 12 trillion more in treasuries next year simply to service its mounting debt. It isn't just the US, all the Western countries are facing a similar debt doom loop, he argued. And as a result of that, that's also a thought that Funky shared earlier on the show. You need to escape your dollar holdings. You need to hedge against the dollar. And the way to do this is to either hold gold or to hold BTC. And this is where the recommendation or where the line of thinking is coming from.
Okay. So, I mean, this is something that Dalio, obviously very successful investor over multi-decades, very well known for his kind of articulation of debt cycles and how they have played a role in the destruction of various empires, whether that was the Dutch, the British, and now moving into the American. He's kind of been talking about this before, and it sounds like he's maybe getting a little bit more desperate in the sense that seeing less hope that this is actually going to get turned around, whereas I think before he's maybe slightly more optimistic. Interesting. I want to tie this with a couple of other things, and then we'll think about what this means for our portfolio. The next two headlines we were going to do, I'll just do them joint, because at its core, it's going at the same thing, which I want to discuss today. The first one is Justin Sun-backed Tron TRX Treasury Company files for $1 billion shelf statement with the SEC. So this is the firm joining a tidal wave of treasury firms investing in various tokens using capital raised through equity and debt sales. That's what all of these treasury companies have been doing so far, right? And this specific company was formed through a reverse merger between SRM Entertainment approximately 2 weeks ago. The deal involved a $100 million equity investment from a private investor in the form of TRX tokens. I wonder who it could be, Legendary. A private investor with 100 million TRX tokens. I mean, we don't know who it is, but I know Justin Sun has a lot of TRX tokens and is very good at making money all the time. That is not official in any way. I am just joking for avoidance of doubt. So the firm rebranded as Tron Inc. It adopted the NASDAQ ticker Tron on July the 17th, with Tron founder Justin Sun ringing the NASDAQ's morning bell last Thursday. Remember, Justin Sun and the US administration now are friends as well, right? He very much invested into World Liberty Fi, which is the Trump when we say the Trump family, it's not literally them, but their DeFi protocol, World Liberty Fi, was backed by Justin Sun. And so now they seem to be on very favorable terms, which means he can do things like go to the NASDAQ and ring the morning bell, and he's no longer someone seen as an outsider, very much been brought into the fold. And the deal itself means that the firm can now sell up to $1 billion in mixed securities, including common stock, preferred stock, debt instruments, and warrants, in order to purchase TRX tokens. That is the objective of this capital raise, or this mechanism through which they will be able to raise all this capital. Meanwhile, the next headline was Mill City Ventures announced a $450 million private placement to initiate a SUI Treasury strategy. The details of which I don't know how interesting they are. Maybe it's important to note that all the prominent firms are in. Big Brain Holdings are in, Galaxy Digital are in, Pantera are in, Electric Capital, GSR, Selene, Parify, Borderless, Arrington, Do you know what this is, Legendary? I realize what this is. When you read all these out loud, you realize that VCs are not allowed to make any money in crypto anymore because everyone hates VC coins. So what have they done? They've gone and funded all of these pointless treasury companies, and that is the way they're going to make money. Crypto participants will not buy their token on the open market anymore because they've realized they're getting dumped on so aggressively by these schedules. And so VCs aren't allowed to make money on these kind of normal crypto protocols anymore. And so they've pivoted. It's all the same names all the time in all of these treasury companies, and they're going to dump on retail in a different way. This is the new way. That's what it is. What do you think about that take? I think that is what is happening, at least in part. What do you think?
Let me do one thing first and add a third headline to that. Don't know if you've seen this one. Canadian vape company CEA Industries jumps 550% in pivot to a BNB treasury firm. Like, we are literally going down the list of the biggest tokens. And in their case, they do a $500 million share sale to private investors with an additional $750 million in cash available through exercised warrants. So that's another $1.25 billion potentially to buy BNB. Exactly this is happening. Started with Bitcoin, went on with ETH, added Hyperliquid, added SUI, added Tron. People are looking at the biggest tokens like, which one doesn't have a treasury company yet? And is there a play as an investor to make money out of that? That's probably the majority of them. Then you have some exceptions. You obviously have Strategy with Michael Saylor, who started that. You can make the argument that what SBET is doing, maybe what also like Bitminer with Tom Lee is doing, is like also very, very strong narrative-driven marketing focus. And yeah, they want to do a bit more and they want to farm yield and stake and restake ETH, but at the end of the day, it's all the same. But I would say 90% is exactly what you said. It's VCs finding a new way to make money in this space. And 10% is this like marketing driven narrative. I mean, Joseph Lubin doing SBET as one of the Ethereum co-founders and helping ETH to like establish this narrative of being the underlying asset of the new world of finance makes a ton of sense looking at that under that lens. But yeah, for most treasury companies, it's just probably like not the most successful businesses trying to pivot or VCs trying to find a way to make money with that. And that's the game that we're playing on the stock market right now when it comes to crypto.
To be fair, I don't blame VCs for doing this. this is their job, right? Their job is to figure out a way to make money, to invest in things early, and figure out, attractive schedules so that they can reach their liquidity, like have a good path to liquidity, so that they can make money. Crypto was a cheat code for that. I think relative to any other kind of early stage investing for multiple years, it's got very, very hard recently. This is a great new opportunity based on the current environment to jump in. So I'm unsurprised that that's something that they want to do. Your job, well, I know we have some VCs listening, so good luck. Good luck. I hope it goes well. For other sophisticated investors who maybe are operating on a more individual level, your job is to be aware in the same way that you're very aware of the other crypto tokens and how who the holders are, what proportions they hold, what their vesting schedules are, what their cliffs are. That's your job, to be aware of who holds what, when they can sell. And it's simply no different. It's just, kind of repackaged. I think you got to think about it in a slightly, well, you think about it in the same way, but you're just going to have to find the documents in a different place, do the reading separately, because that is the thing that you're going to need to protect yourself against if you want to participate in some of these in the run up of these shares. I think the more I think about it, Legendary, something that we need to do, maybe this is something we can do on the Telegram group, which we are about to set up, kind of segue into that for a second. But like, I think this will be not for Saylor and not for MicroStrategy. I think they've found a good model. Maybe even ETH will be okay. But like, knowing when this stuff, when all of these people get to sell, will be very, very important for knowing when the market is going to take a huge turn. I don't think the numbers being raised at the moment is too dangerous. Like 400, maybe 400 mil of SUI is meaningful. But for example, what was it? 8 or 9 bill of Bitcoin got liquidated last week from like one big whale holding. The market didn't really respond too badly. Like it just kind of absorbed it and then it bounced back up. So I don't think the numbers we're talking about, at least on Bitcoin, is meaningful enough to cause a systemic risk. But I do think if these treasury companies just keep spinning out every single week, which they are at the moment, and we get to September and the number is like double what it is now, or triple or quadrupled, then we need to get a real handle on it, because that's going to be the thing which collapses everything. That's my take. Ledge, what do you think?
Yeah, very much agree with that. I think it's important to look at the amount of money that's flowing into treasury companies relative to the market cap of the specific asset. And if, I don't know, if we get to a point where more money is flowing into treasury companies than into the ETFs, this is where I probably will be concerned. And we brought it up a couple of times on the show. Where is the website? There we go. BitcoinTreasuries.net, specifically for Bitcoin, which allows you to track the increase of both companies, entities holding BTC, but also BTC in treasuries over the last 30 days. This figure's been like pretty constant, 4% increase over the last 30 days and roughly a 10% increase. So 282 entities holding BTC, that's 21 more than 30 days before. So these numbers have been pretty constant, I would say. They are very aggressive numbers over the last months. But if we see even this escalate and suddenly like 10% being added to BTC in treasuries over a month, or like 50 new companies coming in, I feel like that's a good website to check in every week, get a sense of the numbers, and get a sense of where we are headed with the treasury craze.
Yeah, completely agree. Just like a final reflection before we close out, like imagine, it's just a reflection on humans, I guess, and greed, because there's a world in which things would be great, I think, if the following happened, which is actually what we're doing, what a couple of other companies are doing. The whole point of all of this stuff, or the real point of it, is to protect yourself against debasement. Like that is the point, or at least one of the points of Bitcoin. There's some other philosophical stuff too. That's like one of its best use cases. And so what I think you're supposed to do on a treasury strategy is take some of the money that you make from your quality business and park it in Bitcoin instead of dollars. Like that's what you're supposed to do. That's what would make sense if you were just a normal, good business. But obviously what happens, because this happens every cycle, is people get overexcited. They want to leverage themselves as much as possible to chase some type of excessive gains that they think is only available to them for a small amount of time. They've seen what MicroStrategy has done, so now everyone wants to do the same thing. And this is obviously dumb, right? You're taking rubbish companies that don't have cash flow, or maybe have a bit, but like are not good companies, raising money to buy the Bitcoin or whatever asset you're trying to do, and that's not a business. That's not a business. There's just it's just an endless kind of buying mechanism, which is going to get very vulnerable at some point. I think Strategy do have a business. They're in the business of selling Bitcoin financial products, which they keep doing successfully. But I don't think anyone else is going to be able to do that. And people are going to get greedy. I think that's what's happening. It happens every cycle. People just can't do the normal thing that they're supposed to do. Just buy Bitcoin and hold it. But people don't want to do that. So we're going to have to go through a collapse at some point in time. I don't think it's going to happen yet. I think we've still got some time, but yeah, I think we obviously need to address it because it's on people's minds and we just see the news all the time, right? So I hope that was an interesting discussion. Ledge, any final reflections on the amount of risk that people are taking and how you're thinking about managing your own maybe at the moment?
One final comment on that is, I think my exposure to the majors is something I'm very comfortable with. I've said it multiple times that the time frame looking towards to exit the market will be as we close in to the end of the year. That is under the current circumstances. Obviously, things could change as macro is changing, as Donald Trump is posting on Truth Social, as the Fed will approach rate cuts. There's many more factors to look at, but that's the general plan that I'm looking at. The one thing I also wanted to quickly comment on before we close out for the day is in response to just Stefano's question on the YouTube comments. He said, bros, is there one for ETH holding companies, a strategy website? And yes, there is one. It's called strategicethreserve.xyz. It's a pretty cool website because you can look at exactly what I said, this ratio from total strategic ETH reserve holdings to total ETH ETF holdings. And it's already starting to get a bit crazy. So currently in ETH ETFs, you have almost 5.8 million ETH. That is 22.2 bill. And the total strategic ETH reserve of all the companies, that's 64 companies that are being tracked here, is up to 2.3 million ETH. That is $9 billion. So that's already like what, 40%. And you can see both the increase in the strategic ETH reserve, the ETF holdings, and this is the thing, you can see the supply dynamics. What I'm sharing on screen is over the last 7 days. You can see the net issuance of ETH is 18,000 ETH. 433K ETH was bought by ETFs. 280,000 ETH was bought by the strategic ETH companies. And the burn is insignificant. It's quote unquote just 650 ETH compared to that. But this ratio is probably also an interesting one to keep in mind. And once strategic ETH reserve companies flip total ETH ETF holdings, I'll probably be very, very happy to have taken my chips off the table.
Yeah, that's an interesting dynamic. What we should do, Ledge, I forgot about these sets. So thanks to Justefano for asking the question in the YouTube comments. We should have, remember, we're setting up the Telegram group. We keep mentioning it. We're trying to make it perfect, but it's not going to be perfect. But we keep coming up with other ideas like, oh, it'd be good to have this, it'd be good to have that. So this would actually be good to have. Let's have those links of the Bitcoin Treasury Company dashboard that you keep checking, the ETH strategy dashboard that you keep checking, because the point of it should be that when you're in our chat, you can know that you can navigate to all of the best data points, all of the best protocols, all of the things that we use routinely on a day-to-day basis to analyze the market. And you should just have those links. Like all of these things are free, but it's annoying, right, when they're not in one place. So our plan is to get that out today. It won't be perfect immediately. Like I think we're going to keep adding it, and we'll undoubtedly have more ideas. Like, oh, it will be cool if we have, you know, we'll track some other metric, and that's on some other website. So we'll keep it up to date. We'll take feedback as well. But that is the objective. We will share that today. I know we've got a ton of DMs asking for access. That is coming as we roll it out the rest of the day. As I mentioned, it won't be perfect immediately, but yeah, it's going to be a work in process. We're here for the long term, and we appreciate you for being the same. Guys, that's our show for today. Hope you enjoyed it. Thanks to Legendary for co-hosting. Thanks to Oxy and Funky for their contributions. And thank you so much for being with us. As always, we do this every day, Monday to Friday, 7 a.m. Eastern time for 1 hour live on X video. And you can catch us on YouTube, Apple Podcasts, and Spotify too. Have a wonderful day. Take care. We'll see you tomorrow. Bye-bye.